Hi everyone, welcome back to my YouTube channel where every week I'm going to share some tips about personal finance and investing. So today I'm going to cover a very interesting topic and I'm sure a lot of you are going to get really excited when talking about this one, which is property investments. Now, when it comes to property investing, there are a lot of things that we need to consider, including price, location, the property itself, and many other things. But today I'm going to touch on three key points only. Um, and hopefully these three key points going to give you a fair, like some information to decide whether you are ready to purchase your first investment property yet or whether you should purchase your next one. So when it comes to property investing, I think the very first important thing is your budget. Saying another way, how much you have and how much you can borrow. So once you can work out your budget and make sure that you actually go to the bank to get the conditional approval or something like that, not just your own calculation, right? Then pretty much you know how much, like the price you can actually pay for a property. And based on that price, that basically decide the location and also the types of property that you can get in. Of course, if you get a good budget, you can get in good major capital city like Melbourne and Sydney or Brisbane. And yeah, if you have a lot of money, then you can buy a house with a lot of land instead of just purchasing an apartment or something like that. So that information is really important because that actually gets rid of a lot of noise and it gives you a fair idea in terms of the location that you can afford. Now, that's the first thing. The second thing is once you know your budget, you're going to decide on the location you can invest. Now, in my opinion, and based on my research and study, um, over the long term, I say long term, okay? Over the long term, the major capital city like Sydney, Melbourne, or Brisbane going to perform really well. And when I select a property for investing, I wouldn't go further out, more than say 25 to 30 kilometers from the CBD. That means the inner suburb and the middle ring suburbs, like closer to the CBD and at maximum 30 kilometers from the CBD, gonna be the suburbs I'm gonna select to invest into, and based on the major capital city like Brisbane, Melbourne, and Sydney. So that is the second thing. Well, you might argue or you might think that, well, in the past, there's some regional areas that generated strong growth and all that. Well, I don't disagree with that. But when it comes to investing, I want to have a system, an approach that can give me a consistent return. So I like something which is in an established suburb with all the shops, the infrastructures, schools, and hospital. And if you think about that, like a lot of people like to live closer to the central. Not a lot of people want to live further out if they actually can afford it, right? So in the long term, when more and more people, when the population in this area are gonna grow, and more people want to live in this area, that's gonna boost the property prices up. That's why I consider major capital cities, and middle ring suburbs. Okay, so that is the second thing. Now, once you can decide on the location, which is which city, capital city, and sort of suburbs that you can afford, then of course you need to look into the property itself. Again, there are a lot of factors, but today I'm going to touch on a very important factor, which is the land to value ratio. So why land to value ratio is so important? Well, the reason is when you purchase a property, right, it got the building and then the land component. Now, the land component going to increase in value over the long term, but the building component going to depreciate. So over the long term, the building value actually goes down. It's the land component that goes up. So you want to purchase a property with a high land to value ratio. So if you purchase a property of $500,000 and the council or some sort of valuation companies or value the land component at $400,000, you're actually paying $100,000 for the building above, which is pretty good. The land value ratio of around 80%. Um, but a similar house like that, but in a different suburbs, different area where the building values, like the building is quite new, and the building is actually like $250,000, and the land is only $250,000. You are actually paying a lot of monies for the building itself, and over the long term, the building value, as I mentioned earlier, are gonna go down. So on that note, some properties that I'm gonna avoid investing in is the high-rise buildings. Why so? Because if you think about that, there's hundreds of apartments built up on a small piece of land. That means the majority of your capital is paying for the building itself, and over the long run, you're gonna what happened, right? The building value gonna go down. Another property that I'm gonna avoid is the off-plan units, or the the building or the houses in the regional area where the majority of the property price is in the building itself. I would really avoid these ones because I want to select the property with high land to value ratio. So those are the three key things: your budget, your location, and also the property that I'm going to consider when I think about my investment property. Based on these info, you're going to decide for yourself whether you can afford a property now, I mean an investment grade property based on the criteria that I just described, or it's going to be a better idea if you wait a little bit longer, save up a little bit more, or improving your earning capacity so that the bank can lend you a little bit more money. You need to make that decision for yourself. Of course, once you satisfy all the criteria and you think you're ready, then there are more things to consider. The little thing about the maintenance and all that. But I'm gonna cover this in the future videos. But for now, let's stop here, and I hope you get something out of this video. I know the market is booming at the moment, but I hope you don't have that fear of missing out. When it comes to investing, it's really important that we are patient and keep a long-term mindset, and only purchase something which can help you to generate growth over the long term. As always, if you have any questions, please let me know. I would be very happy to answer them in my best ability. And for now, have a good weekend, and I hope to see everyone again next week. Bye!